welcome everybody again to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas. Over 150,000 members, participants, and attendees going back to 2003. So we provide resources for Texas real estate investors. One of the resources that we provide is market data. So I'm going to give you some very, very quick market data. I don't have a whole lot of time, so I'm going to do this very, very quickly. What's going on in the market? Well, the average price house in Texas is $436,000. It is down 1% from 1 year ago, basically flat. The median price in Texas, $340,000, also down 1.5% from 1 year ago, basically flat. But if you want to know one data point, like one number, that's like, what is kind of going on? What would I look at to kind of know what's going on? I would say it would be this number right here, months of inventory. What is months of inventory? That's the key number to watch. How do you calculate months of inventory? If you took all of the houses for sale in the MLS and you stopped adding any more, we're going to take what we have for sale. We're not going to add any more. The question is, how long before they're all sold, before the shelves are empty? How long would the inventory, the houses for sale, last before they're all sold? And the answer, 5.6 months. Now, let me put that into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. What market are we in right now? We're actually in a seller's market. Not a very strong seller's market, but it's certainly not a buyer's market. Now, a year ago, we had 4.3 months of inventory. 4.3 months of inventory is a pretty good seller's market. Now we're in a very lukewarm seller's market. But we never got to the buyer's market. Why not? Well, what has changed over the last few years in real estate? Biggest story was what? Interest rates. What happened to interest rates? They went up. When interest rates go up, what happens to home prices? This goes down. Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Who's not listening to me anymore? Look, guys, this is opinion. Let's try this again. I'd like to get 100% participation. You can't be wrong, so nothing's going to happen no matter which way you vote. Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Okay, you're both right. You're all right. Here's the thing about home prices. Home prices don't actually care about interest rates. Home prices care about two things, supply and demand. That's it. Now, do interest rates affect supply and demand? They do, but in multiple ways. For certain, when interest rates go up, mortgages are more expensive, mortgage payments are more expensive, houses are less affordable, right? When they're less affordable, fewer people can afford them, so demand goes down. And when demand goes down, prices go down. But that's not the only effect. There's some other things going on as well. Normally, 2/3 of houses for sale are resale, and 1/3 are new. I'm sorry, 2/3 are resale, and 1/3 are new construction. Right now, it's inverted. Right now, it's 2/3 new construction, only 1/3 resale. How come people are not selling their houses? Because they got a 3% mortgage and they don't want to give it up, right? So right now, people should be saying, honey, let's sell our house and buy a bigger house. That's what should be happening. But it's not happening. People are saying, let's just stay. We got a 3% mortgage, let's just stay. So people are just staying, right? They're not selling their houses. So yeah, demand has gone down, but supply has also gone down. And when demand goes down and supply goes down, what happens to prices? Flat. So that's why we never got the buyer's market, because people are not selling enough houses. Now, a little history. 2021 prices went up 18% in 1 year. 22 prices went up 10.7% 1 year. 2023 flat. 2024 up a little bit at the end of the year, only because interest rates went down a little bit at the end of the year. But basically, it's been flat for the last 2 years. That's where we are. Okay, what's going to happen next? Well, I'll give you some data points. And by the way, this is not, all this is from Texas A&M School of Real Estate, a number of online resources. We're not here to try to make you believe something. There are organizations out there like the National Board of Realtors. They always say the market's going up, the market's going up. Every year the market's going up. They just give you different reasons. Sometimes they're right, sometimes they're wrong. When we think the market's going down, we're going to tell you the market's going down. When we think the market's going up, we're going to say the market's going up. When we think it's flat, we're going to say it's flat, because we have ways to make money in up, down, and sideways. So what's driving the market? Let's talk about market drivers. The economy, not bad. Not great, not bad. Consumer confidence is kind of neutral, in the middle, not good, not bad. Unemployment, solid in Texas. Job growth, solid in Texas. Stock market, it's been good for the last couple of years. Lately, it's right? The stock market doesn't directly affect real estate. When people look at their 401k and they made money, they feel a little better, a little wealthier. They're a little more likely to buy real estate. Business growth, great in Texas. Okay, what else? Affordability. Interest rates went up, right? Cost went up, demand went down. So that's negative. Green pushes up, red pushes down. Yellow pushes sideways. House price trajectory, flat, not up, not down, basically flat. What else? Supply. Let's talk about supply. Active listings, flat. Months of inventory, right in the middle, 5.6. Housing permits trajectory. We got a problem. We're not building enough houses. In fact, we have a national problem. We're in the middle of a housing shortage. Who knows this? Who knows we're in the middle of a housing shortage? We have 6 million fewer houses than we need, right, on a national basis. And when you don't have enough supply, what happens to prices? That pushes prices up. So why aren't prices going down? They should be going down, but there's a limit in supply, right? And when there's not enough supply, prices don't go down. What else? Construction labor growth. We have a problem. Contractors are dying, and they're not getting replaced. The average contractor, general contractor, is like 58 years old, and they're not getting replaced. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer. Seriously. Go to college, get $250,000 of debt. Maybe you get a job for $60,000 a year working for a jerk with limited vacation days, or become a plumber and pull down 7 figures. Because I know plumbers that are making $1 million a year. I don't know any college grads, right, new college grads that are making $1 million a year. So seriously, right, get your kid a hammer. We need contractors. We don't have enough. Of course, yeah. When people need a place to live, they're going to live in a house or an apartment. We got some apartment data as well. We're building some apartments, but we have a shortage overall. Demand, price trajectory flat, pending sales trajectory flat. But this is probably the most important bullet on this whole page. Migration, migration, migration. What is migration? The ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And then there's 10 million other people, we don't know where they went, but there are a bunch of them here too, and they all need a place to live. So they're either going to live in an apartment, they're going to live in a house, and we don't have enough of either one. Apartments should also be going down, but they're full. Why are they full? Because there's too many people and not enough houses and not enough apartments, right? So that's what's going on. That's what saves the Texas market, all the in-migration. That's what's pushing all the demand up. So there's all kinds of things you could say should be pushing prices down. Why are the prices not going down? We simply don't have enough supply. And then maybe some wild cards, some wars going on, some tariffs, immigration, et cetera. So our forecast is as follows. It's pretty simple. The market's flat. we're probably going to see a little interest rate decrease, but probably not much. And this is not just our forecast, but most people say probably by the end of the year, we'll get a little bit of a break on interest rates. If that happens, that'll bump the market a little bit, but not much. Sales are going to flatten, rebound a little bit. We expect prices to be flat to up maybe 1 or 2%. It's a flat year. There's not much that's pushing the market either way. We got things pushing up and pushing down, and they're flattening each other out.